is Larry FX Academy. We basically are about to enter this particular trade. So for which is the volatility 25. So I would quickly give us a rundown on what we anticipate on this particular pair. Now, ideally, we are on a downtrend, reason being that we've created these levels, a high, a lower high, also a lower high at this point, and then we've created another lower high at this point. So basically all of these levels are highs that has been tested, and we are basically looking at creating new levels to take entries from. Now, on this particular market, we have to now go to on volatility 25. We have to go to the lower time frame to see what possibly we could be looking at in taking. Now, we have something here which is markets broke structure at this point. We tested that zone, but ideally for us to get a better one, a better view, all we would simply do is we'll pick this here and I would remove this. Now, market broke this level, changing the trend of the market, and then to add to it, we have a break of trend line. To add to it, we have a clear break of trend line here, and then on the initial market structure, after we had this break, we had a smaller break of structure here. So we had a smaller break of structure at this point. We can call a BOS. So basically, this BOS simply helped us to mark our level to get an entry. So on this BOS, basically, we had our point A, which basically set at this area here, resistance point. Then we also had our point B, which was this. So this was our point B. All we simply saw on this market was we saw market retrace into the 0.78 level. So we had two levels we look at for our entry. One is we look out for market to get into this 0.79 level as our second entry, or we look out for market to get into this level as our first entry. So the first entry we took on this particular market basically hit stop loss. So it hit stop loss here, and our take profit wasn't triggered. So it hit stop loss at this point. Then the second entry basically got triggered from this point. Actually, it was just like a peep. So it was just like it was triggered with a peep, a very slight tap. So that trade would have been gotten with majorly a buy, a sell limit. If not, you just take direct market execution below that level. So that being the case, this was our trade, and it gave us a 1:3.95 risk to reward ratio. You can see it here, 1:3.95 risk to reward ratio. So that was the trade we got on that particular area on this one. Now, today we got trades twice. The first entry hit take profit, and the second entry is the one we're about to take now. Now, the first entry, we got our break of structure at this point here. We have a clear break of structure at this point. Now, this break of structure actually tested even this trend line. Remember the trend line we just drew. So you can see the trend line. So the break of structure actually tested the trend line. So that is like an added confluence. Now, aside that, we have our point A and point B. So we have our point A, which is at this point here, and we have our point B. Point B, which is at this point here. So this is what we have here. Then what we simply did was to mark our level from this area down to the point B. So we'll mark our level from the point A down to the point B. And then for this particular market, two things happened. Just like what happened on the initial trade. Just like what happened on the initial trade, we had our entry at this point, and our stop loss got hit here again. Our stop loss got hit again. And then the second entry got tapped in at this point, the 0.79 level, and our take profit got hit. So this was actually a 1:3.8. If you can see it here, you see it's a 1:3.885 level risk to reward ratio on this particular trade. Now we are having a new trade setting up at the moment here. Now I would simply not do much. I would just simply readjust this to our point B. Remember, we are still on a downtrend, so I'll simply readjust this our point B for us to catch this new entry. So we put it here and then we adjust it. So by adjusting it, we can find out that market has reversed into this particular area, and then it's currently giving us bearish confirmational entry. So we can simply take our short with our sell and then target this point for our take profit, and we see how it plays out. So this is actually our signal for today on volatility 25. So I'll be entering when market closes below this point and when I get my confirmation. So this is actually our trade for today, which is on the volatility 25. So that's all we have. You can see how we've been catching the trades up from here. Patience is key actually in trading. You have to be patient to wait for market to react to your level and react to your zone. thereafter making your entry so that you're able to make profit from the market. So that is it for this particular pair, which is the volatility 25. Have a wonderful day, guys. Peace.